quite staggering when you think about it. Over 1 billion adults globally
Yeah.
are completely outside the formal financial system. That's, well, roughly the population of India.
It is. And it's not just the number, is it? It's the sheer scale of untapped economic potential that represents.
Yeah, absolutely. So today, we're doing a deep dive into exactly that, financial inclusion. We're exploring how banks can and maybe must connect with this huge underserved population.
We're talking about a massive chunk of the world's population whose ability to participate in the formal economy is, severely limited. And that impacts everything, their own lives, obviously, but also the stability and growth of the whole global financial system.
Definitely. And to help us unpack this, we're drawing on insights from the work of Dr. Pooyan Ghamari. He's a Swiss economist, founder of the ALN platform. His work really connects these economic ideas with what's happening on the ground, especially in areas like real estate and tech.
hmm And his perspective is really useful because he doesn't just see it as an isolated problem. He gets how financial access ties into, well, broader economic progress, societal development. That's key if you want real sustainable solutions.
Okay, so our mission for this deep dive is kind of twofold. First, let's really try and understand the challenges these unbanked individuals face.
Right.
And second, what are the actual concrete strategies banks can use to bridge this gap? We'll be digging into things like digital banking, mobile payments, and microfinance.
And fundamentally, if you think about economic development, it's about letting people participate fully, isn't it? Financial exclusion just throws up these huge roadblocks, stops people saving, investing, building any kind of security.
So let's start with the scale. The research we're looking at, referencing the World Bank's global Findex data, puts the figure at over 1.4 billion unbanked adults. And it's concentrated, right? Emerging markets, rural parts of Africa, Asia, Latin America, even marginalized communities and cities.
Exactly. And the reasons behind it, well, they're complex. It's not just one thing. The research points to several factors all tangled up. Often, the most basic one is just the lack of physical infrastructure.
Like bank branches.
Yeah. Imagine if your nearest bank branch is like a whole day's journey away. That's the reality for a lot of people in rural areas. It's just not practical.
It's a huge logistical barrier, but it's more than just geography, isn't it?
Yeah.
There are other big hurdles keeping people out.
Oh, absolutely. Documentation is a massive one. A lot of unbanked people simply lack formal ID, the kind you usually need to open a standard bank account.
Right. That's a fundamental roadblock right there.
It's a bit of a paradox, isn't it? You often need to be in the system to get the resources, maybe to get the ID, but you can't get in without it in the first place.
Exactly.
Then there's the cost factor. Traditional banking, it often comes with fees, right? Or minimum balance requirements.
Yeah.
And those might seem small to some, but if you have a very low income or it's irregular, those costs can be totally unaffordable, a real deterrent.
And even if you overcome the logistics and the cost, there's still the issue of trust. Or maybe the lack of it.
Yes, the research really emphasizes this. There's often this deep-seated distrust of formal financial institutions in many communities.
Why is that?
Well, it could be from bad experiences in the past, or maybe just a preference for the informal systems they know, ones based on community relationships. Plus, a lack of financial literacy can make the whole formal banking world seem intimidating, maybe even exploitative.
Okay, so we've got over 1 billion people facing this web of challenges. What does that actually mean for the wider economy? What are the consequences?
They're pretty significant, macroeconomically speaking. As the analysis points out, when such a large group lacks access to basic tools, credit, insurance, savings, it directly stifles entrepreneurship.
Makes sense. Hard to start a business with no capital.
Exactly.
Yeah.
And people are much more vulnerable to shocks, illness, bad harvest, job loss. It traps them in cycles of poverty.
It really feels like the global economy is running with the handbrake on, in a way.
Yeah,
All that potential just sitting there.
that's a good way to put it. And the research also flags the systemic risks this creates for investors, for policymakers, for global institutions. A large unbanked population can contribute to instability and definitely holds back overall growth and resilience.
Okay, the challenge is clear, the scale is huge. Let's pivot now to solutions. The insights we're drawing on really highlight digital banking as a potential game changer here.
Yeah, what's really transformative about digital banking is how it just bypasses those old limitations of physical branches.
Right.
Think about it. Instead of needing brick and mortar buildings everywhere, financial services can land directly in people's hands. on their mobile phones.
It's a massive shift. And we've seen some amazing examples, haven't we? The research mentions M-Pesa in Kenya, Paytm in India. They've just exploded, reaching huge numbers of people who were previously excluded. They basically leapfrogged the whole traditional banking setup.
And the tech behind it is crucial. Things like digital onboarding, using eKYC.
Electronic, know your customer.
Exactly. Using things like facial recognition, digital ID checks. It lets people sign up remotely. No need for endless paperwork or visiting a branch. That cuts costs and complexity massively. Plus, cloud-based systems streamline everything behind the scenes.
So, because the overheads are lower, these digital banks can offer services that maybe wouldn't make financial sense for a traditional bank trying to reach this group.
Precisely. The analysis points to things like no-fee or very low-fee accounts, micro-savings products, stuff designed specifically for people with lower incomes. And then you have automation and data-driven credit scoring. That allows them to offer things like microloans or flexible products without the huge administrative burden you'd normally associate with small-scale lending.
That makes a lot of sense, using tech for tailoring and efficiency.
Mm-hmm.
But what about that trust issue we talked about earlier? How does digital banking help there?
Well, the research emphasizes the transparency you get with digital records. Every transaction is logged, it's accessible. That builds a clear financial history. Plus, good, intuitive interfaces make these apps easier for first-timers to use. Combine that with strong consumer protection and clear ways to get help, and you can gradually build that confidence in the formal system.
Okay, let's shift slightly then to mobile payments. This feels like another really key piece of the puzzle, especially given how many people have mobile phones now.
It's been incredibly disruptive, you're right. The analysis identifies it as a major force. Global mobile phone penetration is over 70%, even in many poorer countries. So mobile payments offer this almost instant bridge between purely cash economies and the formal financial world.
It's just so convenient, isn't it? Storing value safely, sending money easily, paying for things, all on a device most people already carry.
Exactly. And for many, many unbanked people, as the research notes, a mobile wallet is actually their first step into the formal financial system. The barrier to entry is just so much lower than opening a full bank account.
And the impact goes beyond just personal convenience, right? It helps small businesses, entrepreneurs too.
Oh, definitely. Having access to mobile payments lets small shop owners, farmers, gig workers, you name it, move beyond just local cash deals. They can reach wider markets, start building up a digital transaction history.
Which could help them get credit later on.
Precisely. It becomes invaluable.
And we're also seeing governments and NGOs using mobile payments in really smart ways.
Yes, the research highlights this too. Using mobile money platforms for direct delivery of social benefits, subsidies, emergency aid, it's much more efficient.
Less leakage, I imagine.
Exactly. Cuts down on administrative costs and increases transparency and accountability. The money gets where it needs to go faster and more securely.
Okay, so digital banking and mobile payments are huge enablers. But let's talk about microfinance. The insights suggest it's still very relevant, especially if done responsibly.
Absolutely right. While tech is expanding reach like never before, microfinance institutions, or MFIs, still play a vital role. They provide those small loans, microinsurance, savings products tailored for people still outside traditional banking. These can be absolutely life-changing.
And microfinance itself has changed over time, hasn't it? It's not just about lending small amounts anymore.
No, exactly. The research emphasizes this evolution towards a broader suite of services. Things like micro-savings accounts, microinsurance to protect against, unexpected emergencies, even small investment opportunities. It's a more holistic approach now, aimed at building real financial resilience and helping people accumulate assets.
And I guess technology is making microfinance more efficient too.
For sure. We're seeing MFIs adopt AI for better credit scoring, using digital onboarding, mobile apps for dispersing loans and collecting repayments. All these tech advancements help them scale up, cut costs, and reach more people effectively while managing risk.
And the community impact can be really significant, can it? More than just individual finances.
Definitely. Good, responsible microfinance has a proven track record. It boosts community development. It's particularly powerful for supporting female entrepreneurs. It helps build more resilient local economies. The research points to potential for really fruitful partnerships here. Maybe traditional banks working with MFIs, perhaps integrating financial education too.
So bringing all these threads together, digital, mobile microfinance. What are the core strategies the analysis suggests for banks that genuinely want to serve the unbanked and do it sustainably?
Well, several key strategies emerge. First off, partnerships are critical, collaborating with telcos, with fintech
Or
startups.
leveraging their tech and reach.
Exactly. They often have the digital solutions and the distribution networks already in place. It's much more efficient than trying to build everything from scratch through traditional branches.
Makes sense. Don't reinvent the wheel. What else?
Second, actively working with policymakers on regulatory innovation, pushing for things like tiered KYC.
Where the ID requirements match the risk level.
Right. Lower requirements for lower risk accounts or transactions, and supporting secure, inclusive digital ID systems. Basically, helping shape rules that enable inclusion rather than hinder it.
Okay, so influencing the environment. What about the products themselves?
Product innovation is absolutely crucial. Banks need to design things that actually fit the lives of unbanked users. Accounts for irregular incomes, maybe, low-cost savings options, affordable microinsurance, even finding smart ways to handle cash preferences, because that's still important in many places.
So really understanding that customer segment deeply, their needs, their behaviors.
Precisely. And finally, the analysis stresses investing in financial literacy, in community outreach, building trust through local agent networks. It's not just tech, it's about building understanding, providing support on the ground, demystifying the whole process for first-time users.
So it's a mix, high-tech solutions combined with that essential human touch and understanding. Okay, let's zoom out one last time. What's the big picture economic impact here? Why should global economies really prioritize financial inclusion?
The potential payoff is huge. The research highlights estimates from bodies like the IMF and World Bank suggesting financial inclusion could lift GDP in developing economies by up to 14%. 14%.
Wow, that is a truly massive number. So this isn't just about social good, it's a serious engine for economic growth.
Absolutely. More inclusion means more access to capital, which fuels entrepreneurship. It means people can save and get insurance, making them and the whole economy more resilient. And it opens up completely new investment opportunities in fintech, yes, but also real estate, infrastructure, consumer goods.
And presumably it helps governments too, creates a more stable base.
For sure. When more people are in the formal system, populations become less vulnerable to shocks. Tax revenues can increase as more activity is formalized, and you get better governance through more traceable financial flows.
The research also mentioned a specific link observed through the ALAN platform's work, connecting financial inclusion to real estate development.
That's right. The observation is that better access to financial services, even just basic savings or small loans, empowers people to save for and invest in housing. That stimulates construction, development, and helps build more stable, vibrant communities. It's all connected.
It really drives home the point. Financial inclusion isn't some side issue. It seems absolutely fundamental for sustainable, inclusive, global economic growth.
Exactly. Unlocking the economic potential and improving the lives of over 1 billion people. It's hard to think of a more compelling prospect.
So as we wrap up this deep dive, the message seems pretty clear. Financial inclusion isn't just a nice-to-have social goal. As the insights we've discussed underscore, it's really a fundamental requirement for a stable, prosperous global economy.
And the banking sector is really at the heart of this potential shift. They have a massive opportunity to drive change through smart use of digital tech, building the right partnerships, and really committing to designing services that work for the unbanked.
So here's something to think about. Over 1 billion people are still largely outside the formal financial system. Imagine the incredible potential, the economic growth, that could be unleashed if we fully integrate them. What other innovations, what new solutions might still be out there waiting to accelerate this process and build a truly inclusive financial world for everyone? It's a powerful thought to leave you with.